evolved quite dramatically. And what tends to happen is, people set up fairly small funds and they invest relatively small amounts of money into a large number of companies, and then they raise bigger funds. And as a consequence of raising bigger funds, they can't invest small amounts of money because the economics don't work. So you found a lot of the funds that are out there today, which are now managing several hundreds of millions of dollars, are no longer investing in those early sort of seed and pre-Series A rounds. I mean, they often say they are, but in reality, most of the money and most of the time goes into more mature companies. So on the one hand, it's fantastic. We've got a significant multiple of the amount of money that was available 25 years ago in Australia, which is great because companies still need a reasonable amount of cash to break through. But what's unfortunate is the professional investors are not really actively investing at the very early stage. Now, on the other hand, when I was investing out of the fund, very few individuals were choosing to invest in venture type companies. At the time, interest rates are high and the stock market returns are really good. And the question was, could I get an incremental return investing in a small startup? Whereas now, particularly with the amount of superannuation that individuals have, anybody that's got a couple of $1 million in super could diversify their portfolio and put, some money into startups and private equity and venture type deals. So I think that's changed. And I think the third thing that has changed is, when I was investing in a technology-based business, it would require several millions of dollars just to build the platform. And that was just the beginning. Once you built the platform, you still had to market it and sell it and build the organization. So to fund a decent company back then really required, an initial commitment of, several millions of dollars. It was very hard to build it based on, a $1 million check. So you needed to commit $5-10 million. Today, you can get a lot of proof for less than $1 million. So you can build a platform, you can test the market, you can assemble a team. So I think that's changed as well. So those would be probably the three key things in the last 25 years.